I'm here on the red carpet in Cannes, but the A-listers this week aren't actors or directors. They are the biggest names in Web3. Ethereum is turning 10 this summer, and the network that once aimed to disrupt Wall Street is now powering it. Robinhood just became the first publicly traded U.S. company to launch tokenized stocks on-chain using Arbitrum, a layer 2 built on Ethereum. Now, this is a landmark moment in the institutionalization of crypto. And it's not the only big name making that bet. Deutsche Bank is building with ZK Sync, Coinbase and Kraken are using Optimism. So institutions are choosing different stacks, but at the end of the day, they are all settling back to Ethereum.
Ethereum is getting plumbed into this infrastructure. And historically, crypto and blockchain ecosystems have moved quite separately, even though they're very differentiated technology. And what's happening now is that we're getting plugged into these core transactional systems. And what's going to start happening is all these big global financial flows, investors, savers, people moving money, they are going to start shifting from some of the older mechanisms of doing this into Ethereum ecosystems that can do these transactions way faster, way cheaper, but also very importantly, with significant new functionality attached to it.
Ethereum's market cap sits just under $300 billion, which is a fraction of Bitcoin's $2.1 trillion. Ether spot ETFs also lag far behind, with a combined market cap of about $10 billion compared to $133 billion for Bitcoin ETFs. But momentum is starting to build. Inflows into Ether funds have accelerated over the past 2 months, a sign that investors are recalibrating, betting not on price momentum, but on Ethereum's utility as financial infrastructure. That shift tracks with growing regulatory clarity, the blockbuster IPO of Circle, which issues the second largest stablecoin, and a leadership transition at the Ethereum Foundation. More than 60% of USDC still moves over Ethereum, and from tokenized stocks to decentralized identity, institutions are increasingly turning to tech built on Ethereum to modernize finance.
When you have this global network, Ethereum, where even the participants cannot really pinpoint who takes decisions, even as the process is very transparent, you don't really say this is one person that decides. This is not one institution that decides. You can track that flow of discussion, conversation that leads to the final outcomes, and those institutions can also participate in this process. It's open to everyone. It's transparent. It's documented. So this is the reason why you go to this ecosystem, that you always can revert to fair markets.
Now, at the same time, Ethereum is quietly displacing legacy financial infrastructure. From SWIFT and ACH to private equity rails, institutions are increasingly building directly on-chain, not through one giant announcement, but through steady, compounding adoption.
It's very impressive just like how much the space has succeeded and grown. So I think beyond pretty much anyone's expectations.
Revenue from the base layer has weakened since the last major technical upgrade, and competition from faster blockchains like Solana continues to intensify. Volatility driven by global uncertainty has added further pressure, but for Ethereum's founders and early builders, the focus now is on building systems that last and making sure the core values don't get lost in the shift from cypherpunk to institution.
We want to be something where the next generation can look at it and they can say, yes, this is something that actually is built bringing openness and freedom and fair permissionless access to the masses, and is not just yet another interest group of people who have a thing that goes up in value that are trying to make their thing go up in value more.
So Ethereum may not be the fastest chain, but it is still the go-to for Wall Street. And as more financial giants build on its rails, the network that once challenged power is now starting to reshape it. From Wall Street to central banks, the plumbing of the global economy is quietly being rewritten. More often than not, it runs on Ethereum. The real test now is whether it can scale without losing its values: openness, decentralization, and freedom by design.